Hello and welcome to ET Now's Budget Think Tank. It's part of our budget coverage, and the Budget Think Tank, of course, is where we bring you, or rather bring together, a distinguished panel to set expectations and decode what this union budget must deliver for markets, for growth, and India's next phase of economic decision-making. This is a budget being framed amid global uncertainty, tightening financial conditions, and, of course, rising expectations at home from investors looking for policy clarity, businesses seeking growth signals, and households watching jobs and incomes closely. The big question, does this budget play safe or does it take the next reform leap? Joining us today for a Budget Think Tank panel, we've got with us George Joseph, CIO and CEO, Equity at ASK Investment Managers, Consulting Editor, ET Now, Swaminathan Iyer, Dinesh Kumar Khara, former Chairperson of SBI, Abhishek Pari, Group Head Finance at Waaree Energies, and Rohinton Sidhwa, Partner at Deloitte India. Let's dive straight into the budget expectations that will shape markets, investment, and growth in the year ahead. Gentlemen, all of you, thank you so much for your time today. Swami, if I could come to you first, and let's paint the big picture, the big expectation going into this budget. What do you think is the single most important signal you want the finance minister to send to investors, to businesses, and consumers?
I think the most important message to send out at this point is India is at a Goldilocks moment. This is the phrase of RBI governor. India is at a Goldilocks moment. Very fast growth, much faster than expected. Very low inflation, much lower than expected. This is a beautiful position to be in. And if you're in a beautiful position to be in, why rock the boat? Why go for various radical measures that may, in the short run anyway, produce a large number of losers, even if in the long term it is good. And again, you have a situation where, as you said, globally, Mr. Trump is not done with his wreckage. We have no idea what will happen with tomorrow, what will happen after that, day after tomorrow. We have to be, therefore, on our toes, resilient and prepared to meet whatever unexpected challenges come. Therefore, I would expect that this is a budget that will boast about what we achieved in that first year of Trump, which was expected to be very tough and has become a Goldilocks year. I think we will boast about that, and we will seek to continue on this particular path. I do not expect huge radical things in the capital markets or the exchange rate. The fiscal position is by and large okay. The foreign exchange position is by and large okay. Inflation is fine. Growth is excellent. Why rock the boat? So I would expect to see a large number of small changes here and there. But the overall broad thing is India is already at a Goldilocks moment. This is not the time to let the bears come and disturb her sleep.
Rightly put there. Mr. Dinesh Khara, if I could get you in, and thank you for patiently waiting by. Like Swaminathan Iyer just said, that this is already India's Goldilocks moment. But with global growth uncertain, should this budget prioritize fiscal support for growth? Or you think it is time to double down on consolidation and discipline at this juncture?
Fiscal discipline is absolutely essential. And the current government has ensured that over the years. So going forward, I expect that they will probably follow the same track. And if at all fiscal is ensured, then perhaps even what Mr. Swaminathan mentioned in terms of, the Goldilocks situation, which is essentially low inflation, I think that is one of the contributing reasons because we could manage the fiscal well. So hopefully that is something which we will continue to see. Yes, of course, we have been hearing that of late there is a talk which is there in terms of, addressing the debt to the GDP ratio, which of course is somewhere around 57-58%. So maybe if at all there could be a very clear path, that will probably help in terms of addressing the GSEC yield in the long term. And I think maybe it will lead to the lower interest rate scenario in the days to come. So very clear path in terms of how this debt to GDP ratio will be there in the days to come, will actually go and strengthen the behavior which has been seen for last couple of years in terms of the fiscal being in check. Having said that, the other aspect which probably needs to be addressed is relating to the employment, and that is one of the reasons why when it comes to the affordable housing, or for that matter, the housing sector, that can probably improve the employment conditions, also employment situation in the economy. So I think considering the fact that the challenges which we have from the global headwinds, perhaps that is the other area where some kind of a nudge can be given in terms of promoting the housing sector. I believe that this will go a long way in terms of addressing the challenges relating to the global headwinds, and also at the same time will ensure that the fiscal remains in check, and we will continue to witness the decent growth in terms of the GDP growth, as well as in terms of maintaining the inflation in check.
George, we've seen record outflows in 2025, with January alone seeing around $3 to $4 billion of outflows. How do you think the equity market is placing the entire budget? And is it are there any expectations from the finance minister for the equity markets?
It's a very interesting time. The global situations are very, very challenging. US specifically looking like a fragile economy. In that context, we keeping the fiscal balance at check and also creating avenues for growth is something which the budget has to deliver. Because the growth agenda, the policy measures have been very, very strong in the last many years. But at the same time, this is the time to think about how to create jobs. When AI is taking away many jobs, creating more jobs in India, which can push consumption, because ultimately consumption is anemic at this point in time. And, we need to see high ticket as well as mid-ticket consumption booming also in India, which is one of the key areas need to be seen. I think that is where the budget, the growth agenda continuing, and also policy measures more stable to maintain the fiscal balance in place. So capital markets specifically, I don't expect anything per se, because the revenue streams automatically has been curtailed because of the cyclical downturn in the earnings. So not too much of room is there for big bang announcements on the capital market side. But as Dinesh was mentioning, housing is one area where we think that it can be done. Affordable housing, can it be pushed hard, because that can create more employment. And especially the last 5 years, if you see, the BSE 500 companies have been spending on capex, and government capex was predominantly the highest, which can actually push the growth agenda. So making it a balancing effect in this budget would be very critical, and that is what I would be looking for.
Mr. Khara, I want you to come in here. Let's talk about banking, credit and capex. What are your expectations from the budget to ensure sustained credit flow to MSMEs and large infrastructure projects?
Well, I think when it comes to banking sector, to my mind, there are two things. One, of course, I would like to actually elaborate on that. When it comes to about 8% kind of a growth should be there if at all we have to achieve the goal of the developed nation. So by the year 2047. So I'm going by, ICOR, which is incremental capital output ratio. Actually speaking, the savings rate needs to really go up. So from the current level of about 30%, it must go up significantly. Otherwise, we'll have a dependence on the foreign flows to come in and support our effort to really achieve the investment. So I think on that particular count, of course, when we look at the banking credit to the GDP, there is a scope for improvement. And there is a increasing effort on the part of the banks also to really improve their lending to this particular segment. But when we look at the credit deposit ratio, it is somewhere around 80% already. So which actually means that, the deposit needs to increase. And for that to really happen, there is some kind of a taxation issues vis-a-vis the taxation of the interest rate, interest earning on deposit vis-a-vis the long-term and the short-term capital gain in the capital market. And we have all seen that in last about couple of years, where there is a definite flight of deposits from the banking system to the capital markets. I would say that for the growth, and there is a need for debt as well as equity, and there is a need to balance out the anomaly which is there in the taxation. So I think maybe if at all that can be addressed, perhaps it will lead to better deposit accretion in the banking system, which will in turn will be beneficial to support the lending operations. That is one aspect. And when it comes to the SME lending, etc., there is of course a lot of efforts which have been seen in the previous year in terms of bringing in the platforms, in terms of sweating the ecosystem for ensuring better underwriting in the SME space. And of course, when it comes to receivable financing, etc., for the SMEs, the system has been smoothened quite a lot. So I think these are the enablers which have been created in the past. Yes, of course, I think going forward, we expect that maybe there will be a growth, which we have started seeing in last about 2 months or so, some kind of a growth in the corporate credit also. So that is essentially attributed to the fact that people have stopped availing ECBs and people have actually shifting from ECB to the domestic currency borrowing, considering the fluctuations which we have seen in the recent past. So I think these are the market dynamics which will continue to play. But nevertheless, from the budget point of view, my sense is that if at all there could be some alignment in terms of the taxation of the deposit as well as the long-term and the short-term capital gains on the equity market, that will, I think, equity and the debt capital market, that will go a long way in terms of ensuring that the deposit franchise for the banking system is maintained.
Rohinton, we saw Mr. Khara talking about some kind of capital gains, tinkering, which will be required for equity and debt, especially when we have seen a lot of private capex now raising funds from banks and financial institutions from the domestic market. Do you see some kind of, changes coming to the capital gains regime, especially with respect to debt capital market?
So let me begin by building on the story that started off with Goldilocks. So you have the three bears who are, being held at arm's length. So interest, inflation, and GDP growth doing all well. But remember, in that story, there was also the big bad wolf. And the big bad wolf in our case is really the external sector. And that's where potentially there's a lot of focus in trying to fix that because of the trade imbalances that have got created because of tariffs. We are seeing that manifest itself in our capital markets as well, with this huge, outflow on the part of FPIs. We already heard Sir talked about the implications of a lower savings rate and our inability then to bring in foreign direct investment. So consequently, this is an area that really needs fixing. Typically, capital gains were, as for sales made on the stock market, were taxed at 10%. That rate went up to 12.5% for long term and 20% for short term. So we are seeing this play out in terms of the situation we are in. We are losing some of that capital, which is sorely required by us in terms of filling the gap between savings and what our investment needs are. I think over there, if the finance minister can look and see if there is merit to bring down capital gains tax rates and pull in foreign capital, that would go a long way in bridging some of that gap.
Makes sense. So, Amisa, if I could get back to you, should this budget focus more sharply perhaps on job creation and disposable incomes? And if yes, what kind of interventions you think would actually move the needle?
Frankly, I do not think budgets can create jobs. If it was so simple, the problem would have been solved long ago. I remember a few years ago, There was an attempt to say that the government will subsidize the Provident Fund contribution and various other ways. So part of the cost of an additional employee, the government will take care of. Why don't you then go ahead and hire more people? And then I met a group of businessmen in Bombay and said, on this condition, on these things, given that the budget is trying to give this incentive, how many extra people would you hire? And the answer was, not even one person. Not only that, one of the businessmen said, look, right now the government is only offering to say we will give part of the cost of one new employee. But suppose the government had said, I will cover the entire cost of a new employee, please employ more. Would I employ more? He said, I would not employ more because that fellow will have nothing to do. I already have a very clear idea of how much each person is going to do. If you give an extra person who does not have work to do, it destroys the work culture. So the decisions on employment should not depend on a freebie or some incentive from the government. So to me, that made a lot of sense, and the other businessmen agreed. So we should not have the notion that budgets or a few incentives will create jobs. The creation of jobs will come out of strength overall in the economy. We are showing a lot of the strength. But the kind of jobs that are being created, like the gig economy, which is exploding, a huge number of jobs are being concerned, that is a separate thing depending on the structure. Unfortunately, in India, we have a labor aristocracy, which has created a situation where people are reluctant to hire in the formal sector and prefer to hire in the informal sector. I mean, in fact, there are entire factories running on supposed contract labor and with hardly any actually full-time employees. That is the way we have managed to get labor flexibility into our thing. So at this particular point, giving additional subsidies or other things, I do not think is going to work. What we need is more growth. Right now, we have had a pretty remarkable result, a long-term trend of 6.5% GDP growth over the last 25 years. Can we at this point raise this to 7%? Maybe. Can we raise it to 8%? Yes, that would really create jobs. So how do you get from 6.5 to 8? All I can say is it would require such strong changes that I do not think the political economy will stand up to it. I think we saw this in the labor codes, which some people claimed to be a great success or deregulation. No, sir, it was announced 5 years earlier, and then the government didn't have the guts to notify it. It waited for various state governments, and when a majority of state governments had already made their notifications, the central government made a triumphant announcement as though something new had happened, when in fact nothing really new had happened. And at the end of it all, you find in the results of Infosys or Wipro or others, they've taken a big hit because of the new labor codes. So far from being something that is going to encourage industries, you find that this is a new albatross around their necks. And that is the way our political economy works, I am afraid. The BJP has the largest trade union in India, the BMS. And therefore, everything that the BJP is going to do is going to make quite sure that the labor aristocracy is taken care of. And that is one huge thing which I think will prevent you from increasing productivity enough, especially in the world. I will just say one thing, one proposal. Why do we have so many holidays? Other countries do not have so many holidays. I would suggest, please abolish casual leave. There should be nothing casual about leave. Leave should be a small, limited amount. In the United States, it will be just a total of 2 weeks. Everything all told. In India, we have some 1 month casual leave, 15 days casual leave, 15 days medical leave, pregnancy method. I mean, I regret to say that this is one of the areas where we have low productivity. The real productivity cost of real cost to the company is artificially raised by all these concessions. But is there any chance of the BJP rolling these back? It seems to me no, but I hope they could make a start by abolishing casual leave.
Swami sir, I'm not sure if our newsroom would be happy hearing that, but I can rest assured for media channels, no leave is also a leave. But on that note, we're going to take a very quick break. We'll come right back and pick up the discussion with our budget think tank.
Welcome back. You're watching Budget Think Tank with our guests. Abhishek, we were speaking about the capex cycle there, and there was an interruption because of the network. But do you see a lot of emphasis now being given to capital flows in the budget, especially since we have seen, debt market in India now, getting slightly engaging because all the companies are now raising funds from the domestic market instead of the global markets?
Certainly, if you especially look at last 4-5 years of time, when the policies like PLIs came in play and a lot of manufacturing announcements started happening in private sector, I think we are started to seeing the results. Production numbers are rising, the exports are taking boom. If you look at the share of export from these industrial goods over the last 3 years, there has been consistent stack up in terms of the percentage of total exports from these goods. So certainly expenditure on capex is going to get result, but I think what needed here is the continued support through government spending on the larger projects. Number one. Number two, the continuous support on the deployment side also, because when we are trying to manufacture and compete with the larger economies like in China and likes of the world, what we need to see that they get a lot of subsidization in terms of their manufacturing ecosystem. While in India, if we have to really match up to the size and scale, we need to first build the building blocks, which can only start with bare minimum support followed by the large consumption that we already have in India. So we really expect the more spending on the end consumption, which includes the rooftop program. Like last year, Surya Ghar Yojana came in play, and we just more than 2.5 million rooftops have been solarized in just last 12 months of time. Similar is the impact on the agriculture sector when the PM Kusum Yojana took off a couple of years back, and starting last year, the result is exponentially, I would say very high in terms of the deployment at the Kusum sector. It not only adds the revenue and consistent income to the farming sector, but also frees up capacity on the grid, which effectively help us to reduce the cost of electricity. So continuous spending on the segment like rooftop, on the PM Kusum like Yojana for the farming sector, as well as some more spending on the transmission and distribution sector should help us to continue to remain the manufacturing hub of the world, followed by India looking at becoming the data hub of the world. Because 70 to 80% of cost of these data centers and AI infrastructure is nothing but electricity. And as we move ahead with more manufacturing and more localization of renewable equipments, I think India is on the trajectory of becoming the global hub for lowest electricity cost.
George, if I could talk about private investment confidence, what concrete steps do you think or budget signals would convince the private sector to make investments for the more longer haul, you think?
So, when I looked at the BSE 500 companies, in the top companies, most of the corporates have cleaned up their balance sheets. Banks have cleaned up their balance sheets. And also the inflation is low and the fiscal consolidation has happened. So all put together, when I compare with the year 2000 and today, the launch pad for a big kicker for growth is very much possible at this juncture. Only situation which is not permitting that is the global growth, especially China and other parts of the world, is not growing at the same pace at what it used to be in the 2000 to 2010 decade. But having said that, if you see the capex to sales for BSE 500 companies has been going up since 2022. Now, what will drive from here on, and I think the early capex cycle is gone from 2020 to 25, what will drive from here is creating some sort of push by the government in terms of policies to create very significant headroom for growth in certain sectors. We have seen the ease of doing business and various other things which played out, and also efficiency coming in through GST or IBC, capital recycling. We can more measures of that sort, which will make the private sector companies to invest more on the manufacturing export. So big push on manufacturing is something which I would look forward in this budget through certain incentives or otherwise. We were talking about the China Plus One and so on and so forth. To materialize that and to see in action in terms of companies putting up huge capacities, we need to see the domestic growth also reviving materially. which was slowing for the last 1.5 years.
Swami, if I could get you back into the discussion, other than, of course, the recommendation on doing away with casual leaves, what sectors do you think the budget should focus in on to try and propel growth?
No, look, this is a time when things are very difficult globally. If things are very difficult globally, do not expect Indian businessmen to invest in large amounts to be exported. I mean, it would be silly to do so because we just do not know. You would certainly hold your hands. And if you are catering to the domestic market, the current rate of investment is more than good enough. There are no shortages anywhere for you to look after. The idea that the budget has constantly to feed this fellow, Sir, good economic growth is not brought about government feeding 25 mouths. It is brought about by resilience and higher productivity within them. So we need to focus on the roots instead of the budget attempting to promote this industry or that industry. I would say, first of all, you have to have the capacity to hunker down. I do agree that the Indian conditions for takeoff are very good, but the global conditions are so stormy that do not expect in the current circumstance that people are going to invest large amounts for export-oriented industries today. A multinational can do it. iPhones can do it because they are exporting to their own branches or their own sales points in other places. But to expect Indians to expect a very large amount on export markets at this point, I mean, you'll be wasting your money. Please don't spend your money on that. Say that these are global times when we have to hunker down. We are growing at a very good rate. We are growing at a higher rate than expected. Do not just expect that in these stormy conditions we are going to get even higher, that we are going to grow at 8% when we could not do it in much, much more favorable conditions. So hunker down. This is not a time for a large number of giveaways or a large number of things to spur growth. The fundamental growth capacity we have in India has been built up and we have done remarkably well. So at this particular point, when everybody else is worrying as to, they're going to be slowing down, I think we also should worry that at this point, we got away with it in 2025. In 2026, I think the full impact of the global uncertainties is going to come in and some more uncertainties will come in. So we have to be preparing ourselves for a rocky weather rather than saying, let's go and invest even more because although there are no domestic shortages, there is the whole global market available to you. I'm afraid the whole global market is not available to you, and you must take that into account. Rather, I would say what you should be doing is, look, the Chinese wanted to invest in India. Their biggest car company, BYD, wanted to invest $1 billion investment. We said no. A large number of other people are Chinese. If you want to increase the value chain, in the case of iPhones, okay, we are doing well in mobile phones and assembly. All the components must be made. But many of those are made by Chinese companies. So are we going in the direction of trying to attract more Chinese companies to invest in India? Chief Economic Advisor Anand Nageshwar argued strongly for this a couple of economic surveys ago. But we are just hearing nothing further about it. It appears that because of geopolitical reasons, we are not allowing this. So you have a situation where the government of India itself is saying no to $1 billion investment proposals. I think it is wrong. I think that the more Chinese companies we have in India, each one of them becomes a pressure point which I can push on as a kind of gentle retaliation where required. But if you have no Chinese companies here at all, we do not have that leverage. So I would say even on security grounds, we should be opening our things for much larger Chinese investment in India. I think the kind of the risks are grossly exaggerated. So if you really want to have somebody who can invest in India for the global market, there is nothing like the Chinese. Please encourage them. Please allow them to come in.
Rohinton, trade is a big subject and a discussion point at this point in time. Do you expect a lot of liberalization coming into the customs duty part of it? Are we going to see a liberalized custom duty regime coming in as part of this budget?
No, that's already been something that's been announced by the finance minister. This is one of the last, I would say, areas where a significant dose of ease of doing business is required. And this is also in line with ensuring that supply chains get, better and quicker and faster, both export and import within the country. And there is widely expected to be a good dose of liberalization. For instance, when goods are imported into the country, there's a procedure where you actually pay customs duty on some self-assessed basis, and which remains in vogue until you are able to prove that that was the actual correct customs duty that was due. So these sort of procedures are now archaic, with a lot of tax technology that has come into GST and income taxes. The last bastion, which is customs, is also something which needs to benefit from liberalization, addition of technology and general ease of doing business. So I see this as an area of focus this time with the finance minister. She's already called it out.
Do you expect the budget to provide some export incentives to companies this time?
That's very difficult to say at this point of time, because currently the government is, as you know, working really hard at trying to preserve the external sector in terms of going to a more stable trade of goods. Services for at least have been relatively stable and growing, but the trade in goods is something that's very fickle due to tariffs, and that's something that the government will continue to preserve. Ideally, I don't think it's the best way to preserve it by giving incentives. The best way is actually to open up new markets, which is what all these FTA negotiations are about.
Do you see impetus on more exports and making sure that we have more and better markets to service?
Yes, absolutely. So, like, for instance, all the recent FTAs that have been negotiated where the government on a graded basis is looking at dropping duties both for export and imported goods. I think it's one, it gives a message to Indian producers that, we need to get competitive. We will no longer be protected by high tariffs. At the same time, areas that we were completely shut out, especially within Europe, are opening up to us for the first time. And I think that's a positive trend. In all these FTAs, whenever they're negotiated, a detailed set of calculations is done as to where we will gain share, where we will lose share, what the balance of trade will be. And a lot of the negotiation is based on the assessment that the finance ministry does of what the gains and the losses will be. I'm pretty sure that some of these epoch-making trade deals that are coming about are going to be accretive to us, to our country in the years ahead.
Abhishek Parekh, if you can come in here, do you see the renewable sector getting an impetus in this budget?
Certainly, yes. When FTAs are coming, it is actually working both the way. One way is it is helping us to find out alternate markets for Indian manufacturers to explore, which are more steady, which are more stable, which are more safe. But at the same point in time, it also pulls the trigger that Indian manufacturers need to be more efficient, needs to be more cost competitive, because global market is opening up. At the same time, global suppliers are also coming up. I think that is something to take note of, and I think we are at the cusp of manufacturing, wherein the larger players, the players with more cost efficiencies on the key KPIs, will be able to flourish and grow. In terms of renewable sector, yes, we really expect the spending for renewables to continue, especially on the rooftop, especially on the farming sector with the PM Kusum programs. More transmission and infrastructure needs to be settled down in the country, because if we look at the manufacturing competitiveness also, the biggest bottleneck, apart from the technology available in the country, is also the cost of manufacturing. And power cost is one of the second, third largest of the manufacturing companies post raw material and the labor cost. You try to cut down the power cost, you will have to have more of renewables in place, because that's the only source of power which is the fastest as well as the cheapest source of power. Reducing the cost from 9 rupees, 10 rupees per unit to around 4 to 5 rupees is something that will lead Indian manufacturers at a position where they will be able to compete with not just the large players coming to India, but also go out and compete with these players at a global level. And I think so continuous spending as well as policies like ALMM, which ensure that more of domestic manufacturing is just pushed without pushing away the risk that other players can also come in India. But at the same point in time, Indian manufacturing really needs this stimulus of more spending by government on the end consumer sector.
George, if I could get you in, purely from a capital market perspective, wanted to understand, are you expecting the budget to provide any sort of sector-specific announcements, or do you think it's going to be really more about, macro comfort rather than sector-specific analysis that we'll have this Sunday?
Current situation definitely demands very strong measures on the fiscal discipline. But at the same time, if you look at the growth agenda, which this government has always played in the last 5 years, 10 years, and especially in the last 5 years, we have seen the defense capex going up, the railway capex going up, and last 5 years the growth has been phenomenal, and we see that growth agenda continues, and especially in a situation where the geopolitics become at the center point of discussion, defense capex is unavoidable. So we see that sector should get a boost from this budget as well. So more of manufacturing, be it defense or other infrastructure improvements or housing, that is where we believe a strong impetus can come in this budget. And at the same time, there could also be a very strong measures which can be expected from a capital flows point of view, because the fiscal discipline is one part, but at the same time, when you don't have enough coffers to fund the current account deficit at this point in time, and which is creating the balance of payment imbalance, which needs to be addressed in some shape or form. So the money flowing into India, be it in the form of FDI or FPI or remittances, there should be some measures which will help to boost that, and that will remove the balance of payment situation also. So overall, I see this is more of a disciplined budget. Not too much of money can be spent on freebies, as Mr. Swaminathan Nair said. But at the same time, there could be a big push on the growth agenda, so that when the world is actually facing challenges on growth, India can push growth and attract more capital flows.
I mean, like George said, do you think the budget will focus on getting capital flows back into the country with policies which are more friendly for private equity or, for that matter, foreign investors?
No, I would say the budget needs to understand that we are in a very difficult period globally with geopolitics. It is not a little measure here or a little measure there from a finance minister, which can change when Mr. Trump one day says this and Mr. Xi Jinping says something. I mean, there are enormous, huge things which are going to affect the capital flows. We should just see how can we manage it not to be too rocky. But the idea that we can convert in this very, very difficult typhoon, we are going to have an oasis of peace in India alone, and therefore money will come pouring in. I am afraid that is not the case. So in this particular case, I would say it is desirable to attract money. But as I said, one way to do it is let the Chinese companies come in. Let them come in. That would be one positive way of doing it in the current circumstances. But otherwise, just say that in the current geopolitical uncertainties, do not expect that money is going to come pouring into India. All that you can say is that to the extent that India may be relatively better as a bet than other countries which may be worst affected, to that extent, I think we've already shown our resilience. That this is a place where you can invest and you can take your money out because the domestic market is so strong that you can get out without suffering too large a loss. So I do not think that in this difficult situation, the finance minister will be able to attract more inflows just by an incentive or just by a scheme. I do not think she can do that. But I would say that if she focuses on how strongly we have managed to overcome things in very difficult conditions, if she says that fiscal discipline is going to be maintained despite everything that has happened, and we are going to bring it down gradually as we go towards becoming an upper middle income country, if she gives that particular vision, she will seek to do that and say that, by telling you how responsibly I am behaving as a finance minister, that will then attract money because India is seen to be running a strong and fiscally coherent policy. I think there is nothing better than that to attract money. You cannot attract it by a little incentive here or there.
Rohinton, especially after the Tiger Global case in Supreme Court, do you see some kind of tweaking of the tax laws also coming into play so that it's much more in favor of foreign investors?
Unfortunately, things like tax keep fluctuating. The pendulum swings one way and the other. So we had the case of Tiger Global where, for instance, the Authority of Advanced Rulings declined to give a ruling, and then the High Court confirmed that a ruling could have been given, and in fact, the investment was kosher. And then you have the Supreme Court going exactly the opposite way. So I think what investors generally ask for is not, certain types of exemptions or holidays. What they ask for is certainty in taxes. And I think that's what the government should really foster. I mean, continuing to get in foreign direct investment to just invest in contract manufacturing is not as good enough as if we actually foster a regime of R&D in India to actually do that manufacturing, and that's where we will have the greater returns. Getting in money into a shared service center it's good enough. But again, remember, over there also, it's just a question of using bodies to kind of serve, and you can get what you can get on a per rate hour basis. But if you actually own the IP that you develop for providing those services, that makes you that much more valuable. So I think what the government really needs to look at is bring certainty and longevity to its tax policies, foster a culture of R&D in this country where when we manufacture, we actually get a good fair share of the profit from the manufacturing. Similarly, when we provide services, we get a good markup in terms of what we deserve for the quality of services that we provide. And that's where that second stage of growth that we require, from going from a lower mid to a mid-level economy and then to a much more developed economy in the future, that's where the growth will come from.
Okay, lots needs to be done, but as Swami sir was saying, that it's a rocky, stormy world out there, so staying afloat may be just the need of the hour. Let's see what the budget entails. But Swaminathan Iyer, thank you so much for your time today, and I'd like to thank all of our other panelists as well, Mr. Dinesh Kumar Khara, George Joseph, and of course Abhishek Parikh, as well as Rohinton Sidhwa as well. Thank you so much for your time today.